In this video, we're going over a day trade recap from Dr. Metals. Dr. Metals is one of the best zero DTE traders in the world, and he has a course out called the Statistical Day Trading Course. If you want to learn from him, we encourage you to take a look at that course or join the Dorian Trader, and you can learn firsthand from him and others at the Dorian Trader. Okay, so I'm just buying a little time talking about the markets for a second, then I will jump in and help as many people as possible. If you
Hey,
have
O'Brien.
Hey, Dr. Meadows, how you doing this morning?
Man, this is crazy. This market is absolutely crazy. And,
Absolutely.
just to put in perspective just how much the VIX has spiked. I mean, I'm looking at the two delta, and you're able to get like 85, 90 cents credit, on the call side, it's just crazy. It's tempting me, but this market's so crazy. I just don't know what to do today. I
That,
mean, you know,
no, go ahead, go ahead. I'm sorry, go ahead.
I may put a little bit on just the call side and just kind of
Hmm.
see how things go. We're so far away and able to
Hmm.
get so much credit, relatively speaking.
Hmm.
I kind of feel like, hey, it's a crazy day, but at the same token, the amount of credit you can get and be at the two delta is nuts, you know?
Yeah, absolutely. Dr. Meadows, we got 122%, and that's actually off the highs of the VIX this morning. So, Dr. Meadows, what's up?
Man, you know, little consolation. I mean, well, don't get me wrong. It's nice to
Hmm.
win.
Hmm.
But the rest of the portfolio is just good grief. Um, anyway, um, so, on a day like today, of course, you expect, the potential for the market to move tremendous amount already is there. It's already kind
Hmm.
of baked in. So there's that risk, but at least from a VIX standpoint, it's just unbelievable how far you're able to get out.
Hmm.
So, the initial, okay, I want to let's see, yeah. So my initial put position was 50 wide, but the other thing too, I wanted to emphasize, if you look at the 5,000 put position, and then that 4950 put position, so
Hmm.
5,000 was my initial short position, and then
Hmm.
going 50 wide was my initial long.
Hmm.
And while I wound up winning on that trade and closed it out like to like maybe like $500 or so, I just
Hmm.
want to emphasize like how much money the longs cost on a day like today, even going 50 wide. It was
Yes.
like I put this on, I forget how much credit I got on here on the shorts,
Hmm.
but the longs cost a substantial amount of money. And like even for my large account, when you take
Hmm.
into account how much other positions I had on,
Hmm.
I actually couldn't really afford to go and pay the 5 cents. It was like 300, 300 points away kind of
Uh-huh.
deal. You know what
Uh-huh.
I mean? So,
Uh-huh.
so I had to kind of eat it a little bit, which
Uh-huh.
is, which, I'll trade. I mean, I've traded narrower contracts in the past. I'm just not used to going 50 wide and still paying that much. And kind
Correct.
of a similar situation on the call side, that 5390 right
Hmm.
there,
Hmm.
that was actually paired up with this 5335. That was my initial positions on that. And you see I
Hmm.
paid, 500 some bucks for that.
Hmm.
And that was actually what, 45 away or something like that, and still paying a nice amount for those longs.
Hmm. Hmm.
So that was the initial position. Um, the 990 here, this 5400 call position, this was actually the very first position of the day, and this was my tradition. I actually did go like 100 wide or whatever on here to
Hmm.
just pay the 5 cents. I
Hmm.
had the buying power to do it,
Hmm.
and I actually just put that on. I was like, I'll just put $1,000 on the call side, and just, we're so far to the downside. I was like,
Hmm.
okay, I'm willing to do that first. And in the market, like I said, we were already down like 150 points, and then we got down to like 190 points or something like that. This
Hmm.
had pretty much come in already, and that's when I started putting on some of the actual condor positions, and was able to win on that initial condor position. So that's like the 53.35 here
Mm-hmm.
and the 2700. And then I actually rolled them closer, both sides in to this 50.50 and 53.05 and was able
Mm-hmm.
to win on that too. So it actually was a very good day, like, close to 4 grand on the, when it's all said and done, even with the expense on the longs on zero DTE. But again, the rest of the portfolio is like a 10x loss of this. So,
Yeah, yeah. It helps to offset some of the losses, but when it's that bad, it's like throwing a drop of water in a bucket. But hey, it does show that you can do this. You can do this trade successfully in a crazy market the way it is. And I remember you doing these things during the pandemic, so you
hmm
got your experience with. I mean, you have the experience with doing with this volatility at this level. So
Well, the
pretty
weird thing
awesome.
is too, yeah, um, I guess good or bad. I mean, I don't know if folks were noticing who were doing zero DTE with the vol spiking like this. I mean, there were several strikes that essentially, like, there was like 3 or 4 strikes in a row where essentially like it was the same amount of credit. You know what I mean? Like, and so you could get further away for like the same nominal amount of credit. Like there was like
Hmm.
3 straight strikes that had like 50 to 55 cents. You know what I mean? And in a
Hmm.
lower volatility market like that, you don't get, you know, consecutive strikes that have essentially the same credit, you know? So that was just kind of a weird thing, allowing you to get further out. But anyway,
Absolutely. But you had no heat though today, which is good.
yeah, which surprised me. Yeah, nothing was actually really challenged much. So yeah,
It looks like what's name it jumped in as well. Jack today.
Jack.
Yeah,
Okay.
he did well also. So you guys jumped in his last 2 days with the zero DT trade, and it's both done well. It's the fear, the volatility, like you said, it allowed you to get really far away, and so the low on the day was the 15. On the put side was the 51.19, I believe, on the SPX. You can see that when you put that original put on was at the 5,000. So that's like
Right.
119 points away from the low on the day. So that's
So
that's
yeah,
pretty
the
nice.
highest delta I did was these were 3 deltas. Like everything I put on was at like the 3 delta. It was
Oh,
crazy.
okay. Okay.
Yeah. Hey,
let's
O'Brien. Doc
let's
here.
Hey Doc, how you doing this morning?
I'm doing all right. How's everybody doing? See the markets reflating up, which is good. So that's a helpful thing.
Absolutely,
See if it's
absolutely.
sustained, you know? Yeah, man. So yesterday, I gotta say, I mean, with the big increase in volatility and
Mhm.
the ability to get really far out, I mean, zero DTE has actually been pretty good these last couple of days.
Mhm.
Yesterday, somewhat arbitrarily, I mean, the SPX was up about 1.2% or so when I got in. That was somewhere, it was like between 10:30 and 11, somewhere
Mhm.
around that
Mhm.
range. And honestly, we continued to kind of grind up throughout the day or whatever, but really
Mhm.
slow enough to where that call position really never got challenged to any
Mhm.
significant degree. I don't think it went red at all.
Mhm.
And obviously the other big thing, volatility was coming out. That's another huge benefit
Mhm.
in terms of having these things decay away the value in them. So that was good. The
Yeah.
only negative is that, even going like 50 wide or so, as you can see on the put side and whatnot, you,
Mhm.
you
Mhm.
still you're still paying a decent amount for those longs. I'm not used to,
Mhm.
paying, so that was like 60 cents or so. Or I'm sorry, I paid like, wait a minute, it was 12 times 500. So no, I definitely paid like what was the cost basis on those? That
It
was
looks
like,
like you pay about 40,
yeah, about 40,
45
50 cents.
cents.
Yeah, 40
Yeah.
cents exactly. So
Yeah.
that's been the only kind of, downside is that, I mean, if you really want to get to pay a nickel in this higher VIX environment, you got to go 200 wide. And even I don't have the buying power to do that for a lot of contracts, you know.
Yeah, because buying part gets sucked up from the other stuff, right? So it's
Correct.
all the craziness. I mean, the volatility has come down a lot. We were at 50. We had a 50 handle. We're right now. It looks like we're probably at the low 20s here. Yeah, we had a 21 handle now. So it's coming back into line. So which is great. I don't know how well positions are doing, but a number of us needed the market to go up, and I now we have a short-term trade on Dr. Metals, and we don't want the market to go up too fast.
Right. Right.
So are you jumping in again today? Because it looks like it's no economic data out today.
Correct. Yeah, I will. Yeah. I mean, you know, and again, this is in general, you know, a
Uh-huh.
favorable type of day with a big up move to
Mhm.
start with. So, yeah, I'm anticipating things, this being a trade day for sure. Yes, sir.
Okay.
Let's
All
see what
right.
the
So
VIX is at. We're still at, yeah, because we're still at a 22 VIX. It's going down, you know, so that's another favorable thing on the call side to help us out.
mhm,
Um, and you know, I'm gonna post here quickly. This is gonna be part of the teaching class, but
mhm,
one quick. I know you always have a short vol position on. I know you do,
mhm,
and I don't always. It's one of those things where like I tend to. I tell myself I want to have a short vol position on, but I don't a lot of times. But when we have a spike like this, and this was something that one of my first options mentors, Cameron, who you
mhm,
remember,
mhm,
taught me, you know, when the VIX spikes, he would oftentimes put on these call spreads just above the spike level and count on it reverting back, you know? And
mhm,
so that's what I did. And let me see if I can just post it. Now, I'll go into this in some more detail
mhm.
at our next whatchamacallit. But I'm gonna get a quick screen capture and show some folks. Give me 1 second here.
Okay. No worries. Your next
I'll
teaching
post it in
class.
the yeah, I'll
Okay.
post it in the
Okay.
zero DT, but I just want to show really quickly in case folks want to do something like this. I still think there's time to do it. It's just not as good as it was a couple of days ago when we had the big spike.
No, not at all. Not at
Here we
all.
go. Bam. I'm gonna post that. So I don't know if you
So
can
you
see that pop up there
yeah, let me
in the
double check. Yeah,
Discord.
it did. It did here. Let me make it a
So
little bigger for people to see. Yeah.
yeah, so we had the VIX spike up to, you know, well above 30. Okay, so if my short position there, the call is at 38, it must have
Yeah.
been at around like 37-ish or so at the time because the way he taught me was, you know, when you see these big spikes, he's like, you know, VIX is always, you know, it's gonna mean revert, you know, so
Always.
he yeah, so he didn't always have on a constant short VIX position. He just had
Mm,
on like when it was spiked like this, and he
mm,
would put on you know, a position just above where it spiked. Now, he would give himself several days for it to work. So he's always going out 30, 40 days or whatever to give it time
mm,
to work out. But it
mm,
usually would come in fairly significantly early than that. So this
mm,
was put on 2 days ago on the big spike. And
mm,
again, you keep the spread relatively narrow, you know, 2.5, 5, that kind of deal. And you know, you sell a bunch of call credit spread short just above where it's spiked at. And then, you know, you're counting on things to revert back to the mean here. And you know,
mm.
you see this trade's only been on for 2 days, and you know, already a nice chunk of it's come out, like 60% or so, as the VIX starts to go down, you know. So again,
Absolutely.
this is an episodic kind of trade, you know, that folks can do when we have a big spike. Now, I know again you always have some short VIX on, and I know you probably got challenged pretty hard on it, the ones that you have
So
on constantly.
absolutely, absolutely. You get challenged. I didn't have a lot on um,
Hmm.
Dr. Metals because when volatility gets really low, the way it was just before,
Hmm.
you know,
Hmm.
for most of this year, it it scares me because
Hmm. Hmm.
I'm I think we can have a 50% up move in volatility or something such as that, right? And
Hmm.
but obviously I didn't think we would have 100+% up move after we already had a 60% up move. So, but I didn't have anything that got really hammered because I didn't have a lot on the VIX at this
Hmm.
time because
Hmm.
the VIX was too low.
Good.
And
Yeah.
and but I I I wanted to sell, or when it jumped up, I wanted to sell the VIX, but I was so caught up doing other things with members and so forth. I forgot to sell it, and it didn't give you enough time to. I mean, it started to revert fast right after it hit 50. It didn't stay at 50 very long, right? Um,
Hmm.
and then you got in it at 30, and it didn't stay at 30 very long, but it can during more kind of real economic stress, it can stay elevated for a long time. And so Cameron was
It
telling me,
can.
okay, go out 40 something days or whatever, try to go out and give yourself some
Yeah.
time, but
Time.
it can
Correct.
stay elevated longer than that. It's
Oh
not
yeah.
and so, but in this case, it stayed elevated only for a couple days, and then
And
wanted
right. And the reason to go out this long for everybody is that, again, it can spike again. You know what I mean? It certainly
to.
can.
Hmm.
But I'd be looking to take this off, probably about 50% or so
Hmm.
off. And I mean, and again, you tend to stay in these things, several days kind of deal if
Hmm.
things kind of go the way you anticipate.